This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are starting a fresh new week here and coming in with all the enthusiasm after that big win on the cricket field, and hopefully, we continue that momentum and enthusiasm later into this week in markets as well. We're coming to you from the CNBC TV 18 Motilal Oswal studios, and I'm Prashant. With me, my colleague Sonia, and Rima is with us as well today. Guys, hi. Morning.
Hi, good morning. Good morning, Rima.
The last week of the Samvat gone by.
And what a way to start it, right? I mean,
absolutely. The win, the pickup in the global market.
Absolutely. I mean, what a great match last week. Yesterday, of course, and absolutely fabulous performance from Virat Kohli. His 49th ODI and pretty much, giving himself a birthday gift. It was celebrations galore, absolutely. And I mean, this time just sort of bulldozing all the teams, right?
That's the only wrinkle, right? I mean, it's like so one-sided. It's like a drubbing, right?
Yeah.
I mean, so I was reading that the South Africans, and it's absolutely true, that they didn't even get to Kohli's score. I mean, so which is...
I think from a viewer perspective, it's not fun, but from the team, just if you look at it, the kind of performance that they're, the top-notch performance, just goes to show that they're sort of invincible, right? Yeah,
we'll ask Nimesh how was the viewer performance because he was there. We'll get a pitch report a little later on the program. All right, well, it's absolutely great. 8 games, 8 wins, and we're at the top of the league table. Let's just look at whether the market here can also turn around its fortunes a little bit, right? It does look like that perhaps we are set to reverse our fortunes as well. I'm talking about the global market. So let's start with what you need to know as we begin another day, another week. So U.S. equities continue to rally as bond yields continue to fall. It's as simple as that. Bond yields were rising. They had gone to 5%. Equities were sulking. Yields have sold off and equities are rallying. Now, the 10-year in the U.S., the U.S. 10-year is cooled off 50 basis points from the peak of about 5.0 something. So that's a big sell-off coming in at about 5 or 6 trading sessions now. On Friday, we got the U.S. jobs data. The headline number was, adjusted for the auto strike, was largely in line, but there was enough detail which kind of showed you that it kind of gels with Fed Chair Powell's sort of speech after the Fed meeting last week, that it perhaps looks like a soft landing. I mean, it looks like the economy is trending down nicely. I mean, just for context, the unemployment rate in the U.S. Is down about 0.5% in the last 6 months. That is consistent with an economy which is slowly coming off, gently coming off, not in a very sharp way. What did Powell say? The message was very clear. The inclination was very clear that he would prefer to hold the line as far as further rate increases are concerned. And the market consensus has also moved. There were a few mainstream economists who were holding out and saying that, maybe the Fed will hike in December, etc. But bulk of all of those people have now kind of fallen in line. And the base case is now that the hiking cycle is over. Nearly 500 basis points done in this hiking cycle over the last year and a half, and now we are done. Now, on Friday, just to get back to the day-to-day action, Nasdaq was up about 1.4%. The Russell 2000, which is the small cap index in the U.S., was up almost 3%. So these are strong returns, daily returns that we're looking at. On Friday, the 10-year in the U.S. lost 9 basis points. We're at about 4.57. And, of course, cumulatively, as I said, from the highs, we're down about 50 basis points. Dollar index has sold off a full 1%, by the way. It hit almost 105, so we're not talking about 107, 107.5. So it's come off sharply. And oil also at about $85, which is a good $7, $8 lower as compared to the high hit post the sort of Israel conflict broke out. So this is a pretty positive backdrop to begin the week, begin the trading session with. So it's thumbs up from global markets, and it's up to us for the market to perform. Now, the Nifty on Friday closed exactly at the 38% retracement of the October fall, almost exactly at the retracement. We left off at about 19,230. Next level on the upside is the 50% retracement, which comes in at 19,344. Now we're looking at the bigger retracement. We're looking at the fall from not just the October fall, which was 7 days worth, but the fall from the all-time high in September to the lows that we made last week, the week before. So that number is 19,344, the 50% retracement. And after that, I mean, we'll talk about the 61.8%, which is at about 19,463. By the way, that is also where the 20-day moving average comes in at. The 20-day moving average is at about 19,424. And the 61.8% retracement is at 19,463. So almost coinciding, both those levels. And that's the big one to take out. I would imagine that looking at the way things are, you perhaps will test that and perhaps even higher in the days to come. Supports for the Nifty, broadly, I mean, you've got to look at very near-term levels at about 19,100 or so. So that's the marker on the downside. Bank Nifty has been the weakest of the indices, the frontline indices. It should first test the 20-day, which stands at 43,600, which is nothing, which is about 300, 350 points away from where we are right now. After that, 50% of the fall, the fall from the all-time high to the low comes in, which is 43,600. Sorry, that is 44,200, which comes in. 43,600 is the 20-day. So these are levels on the Nifty Bank as well. Immediate supports come in at about 43,000 levels on the Nifty Bank. Again, just about 300 points away. And of course, I mean, the strongest of the indices has been the small cap index, not just here, but globally, right? The small cap index is now just 1% away from all-time high levels. That's it. It fell the most. It fell 7% in that, drawdown that we got, but it's come up the maximum, and it's almost at back at where it started from, which is, just about 1% off. The Gift Nifty will come up on your screen. It's always desirable to get a little bit of a weakish kind of open, but I think it's hard. It's tough to ask for that because the global cues are indicating that all seems to be well, at least for now, and that's why you've got that 140-odd point uptick straight at the word go. Of course, with the open like that, it gets a little complicated, but I would say that, you've got so much going in favor, right? FI is selling, if you look at that, that's kind of tapered down to next to nothing. If you look at Friday's figure, in the derivatives market, FIs have started, for the first time on Friday, started to cut their short positions by a little bit, not very much. And of course, globally, the screen is looking much clearer. And this time of the year, which is the end of the year, seasonally is a strong period for markets. So perhaps there is more to go here. But if you're trading, I mean, you want a little bit of a dip at some point in the intraday, you will get that. And that's the time to get in once again. So 140 strong points this morning is what the Gift Nifty is indicative of. Sonia.
Absolutely. And, we were making this point last week as well, right? As to how this is a classic playbook. Every time there's a geopolitical crisis, the market, of course, unfortunate that the crisis is playing out for so long and there's no ceasefire just yet. But the market is using every dip as a buying opportunity, and that's something that's played out really well. So if you look at it, right, I mean, the Gift Nifty today is up about 143 odd points, but just map the last, 10 days or so, the Nifty is up almost 400 points from the 26th October low of 18,857. So that's, a big rally that we've seen just from the recent lows that we saw. So yesterday as well, DIs have bought in the cash markets about 400 crores. The FI selling has reduced considerably, so there's plenty of momentum coming in terms of flows as well. Now, a couple of things that I want to watch out for. One is that we've had good quality earnings, barring a few and far between. The earnings have been quite good up until now. SBI's Q2 numbers, the asset quality was best in the last 8 years. Loan growth was a healthy 12.5%. And we've had some other earnings as well that have come through, reported very good numbers, the likes of Interglobe Aviation, strong earnings coming through. It's turned into profitability compared to a loss last year. So, all of this put together is aiding the market momentum. Now, as we know, the global cues are strong as well. This week, the week gone by was a very strong week. So the Dow is up about 5%. The S&P 500 saw its best week since November 2022. Of course, you saw the US bond yields cool off as well. So that has aided sentiment. The important bit is, by the way, the S&P 500 is now up almost 6% in the last 1 week. So keep that on your radar. But this 19,250 to 19,300 mark was a resistance level for the market. And that could be taken out today, given at least the context with what the Gift Nifty is suggesting as the opening. Lot of big earnings today and through the course of the week. You have Divi's Lab, Bharat Forge, Exide that will be reporting earnings. There's Apollo Tyres later on this week, and then a couple of other heavyweights as well. And of course, we head into Diwali, so there's going to be all of that festive cheer. But it's good to see that, all the dips are being bought. So the bulls are sort of once again tightening their grip in the market.
Absolutely. Now I'm just wondering whether the FIs are going to come back in the market. One of the reasons, the big reason for FI selling was rising US bond yield. And that has reversed, right? As Prashant pointed out, the US 10-year has eased 50 basis points from its peak level. There is the peak Fed narrative. So will that FI selling reverse now? Maybe they will start feeling the FOMO because the Indian markets have done pretty well. So we'll watch for the way the FIs play in the Indian markets in the last 2 months of the year. And we're already seeing some signs of FI selling abating. On Friday, the FI selling was about 12 crores. The day prior to that, it was about 1250 crore. And the day before that, on Wednesday, it was about 1800 crore. And remember, this follows FI selling of 20 to 30,000 crore in the months of August, September, and October. Secondly, that point about where the Nifty opens, the GIFT Nifty is suggesting a start closer to that 19,400 mark, which puts it very close to the 20 and the 100-day moving average at the opening level. 19,423 is the 20-day moving average, and the 100-day moving average is 19,447. And last week, the Indian markets underperformed the global markets, particularly the US. So, the Dow, the S&P 500, Sonia pointed out, was up more than 5%, but the Indian markets were up only about 1%. Today, it's going to be a lot about the earnings, reacting to and watching out for the big ones. And, keep your eye on even the likes of Nikkei, etc., which report their numbers. Cello World listing is today. It saw a pretty good subscription of about 30 times overall. And there is a new a company which is going to be opening up for subscription, Protean eGov Technologies. And this is an interesting company because it's a company which helps with the digital Aadhaar stack, not Aadhaar stack, but the entire digital public health stack of India. So the PAN card issuances are done by this company. If you want to update your PAN card, get the authentication, that's done by this company. Then your tax filing is done by this company. So, it's a play perhaps on, India's digital stack.
Okay. And
isn't it the same as NSDL?
It is.
It is NSDL.
So NSDL was split into their, services, the e-government services, and the NSDL, the depository business.
And the second one is this one.
And this is the second one, which does tax, PAN card, a little bit for Aadhaar, etc.
so this is a big week for the secondary market, right? There's also Honasa Honasa Consumer will be listing on the 10th. So all eyes will be on that after the hefty subscription that Honasa got. All eyes will be on what happens with the listing. So lots happening this week. It's also an earnings-heavy week. It's the last week of the earnings season, so lots to talk about. But on the equities front, first up, we have a comment from Rhythm Desai of Morgan Stanley, who says an event-heavy calendar with potential binary outcomes sets the market up for volatility. After having been less volatile than ever, in his base case, he says the fundamentals are likely still driving equities higher. India remains a top pick in the emerging markets. They are overweight financials, technology, consumer, discretionaries, and industrials, and are underweight on other sectors. That said, he adds the macro trade could peak in the coming weeks.
Okay, well, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says that a dovish pause by FOMC and soft labor market data have led to reassessment of dollar strength and unwinding of positions. He says that along with absence of incremental geopolitical risk, have improved risk sentiment for Asian currencies. However, he adds the rupee is expected to underperform with the RBI smoothing volatility from either side. He goes on to say that the rupee is to be relieved from the pressures of a strong dollar and equity outflows in the short term, and should trade in a range of between 82.85 to 83.35 to the dollar this week.
All right, and on the bonds, B. Prasanna says that global yields registered a sharp decline on the back of a dovish pause from central banks in the developed markets supported by weak economic data. He says local bonds, however, underperformed the global bond rally owing to the risk of open market operation sales by the RBI. He said the market would keenly watch for the upcoming inflation prints both locally and globally. He expects the market to consolidate with the 10-year benchmark bond yield ranging between 7.25 to 7.40%.
And we have lots of stock-specific action to track today. We'll get to it in just a bit in our special Top 10 segment. We're looking at State Bank of India, Interglobe Aviation, Vedanta, JSW Infra, JK Cement, Aarti Industries, and Thermax that are on the back of positive news flow. Bank of Baroda, PB Fintech, Delivery are stocks on our radar that are likely to open in the red.